All right, so today we're going to take a deep dive into Monogram Technologies.
Okay.
Ticker symbol MGRM.
MGRM, got it.
So this company is pretty interesting. They're at the intersection of AI and advanced robotics
Yeah,
in orthopedic surgery,
I like it already.
and they're focusing specifically right now on knee replacements.
Okay.
So we're going to try to cut through all the noise and really figure out like what they're actually doing,
Sounds good. Yeah, I'm excited.
what they're building.
Yeah, and it's not just like one thing they're trying to do, right? They're going for like a whole platform, a whole system.
Right.
They're integrating personalized 3D printed implants
Wow.
with AI-driven robotic surgery.
Pretty cool stuff.
And they're calling it patient-optimized outcomes, which is really interesting.
Yeah, it's a pretty big vision for joint replacement. It's pretty ambitious.
It is.
So to figure this out, we dug through excerpts from deep research, Monogram Technologies. And this is going to give you a good view of the core of their business, what their financials are, and really how they stack up against their competitors in the market.
Right.
And our mission today is to make sure you understand enough to evaluate them as a potential investment.
Very cool.
Stick with us till the end, and we'll give you a final thought that looks at the bigger picture of where personalized surgery could go and the impact it could have.
Sounds good.
So let's jump right into the business model, right?
Mm-hmm.
So they're not just trying to sell robots or implants. They're actually going for like an integrated solution
Okay.
where you have these 3D printed personalized implants that work with their robotic surgery system.
That's really interesting, yeah, because a lot of companies are kind of choosing one or the other, right?
Right.
They're either doing the robotic surgery or they're doing the implants, but not both.
Yeah, and they're really emphasizing how they're going to make money, and they're going for a multifaceted approach.
Okay.
So they want to get revenue from selling and leasing the Imbo's robotic equipment and selling the Impress implants.
Okay, so that makes sense, right? That's the initial sale, but what about after that?
Yeah, so they're also going after these recurring revenue streams,
Okay.
like software updates, licenses,
Oh, I see.
tissue ablation tools that are used during surgery,
Makes sense.
navigation consumables that help ensure accuracy, and other instrumentation for the joint replacements.
Okay, so they're really trying to capture as much of that revenue stream as possible.
Exactly. And it's really important to understand where they're at. Like, they're in pre-commercialization right now.
Okay.
So they had a little revenue, like $600,000 back in 2021.
That's not much.
But their trailing 12-month revenue is super low.
Right.
So their real chance to grow hinges on them successfully launching their Embo system.
Okay, and is that going well?
Actually, yeah, they just recently got FDA clearance.
That's huge.
That was like a major step for them.
Yeah, because without that, they really can't move forward.
Right. So that FDA clearance is what's going to enable them to access all those revenue streams that they've laid out. So the market's really going to be watching to see how they go from just R&D to actual sales.
Makes sense.
So let's look at what they actually offer.
Okay.
So the main thing is their Embo's TKA system.
The TKA.
That's
Okay.
total knee arthroplasty.
All right, so that's for knee replacements.
Right. But it's not like just any surgical robot. This thing is AI powered, and it helps the surgeons put in those Impress implants super precisely.
Wow. Okay.
So it's got this 7 degrees of freedom robotic arm.
That's a lot of freedom.
Yeah, it's got great dexterity.
Wow.
And get this, it's got a hands-free foot actuation system.
What, you control it with your feet?
Yeah, so the surgeon can keep their hands focused during surgery.
That's pretty cool.
Right, and they say their cutting tech has a 300% increase in feed rate
Wow, that's a lot.
compared to some other methods.
Yeah, I mean, that could really cut down on surgery time.
Yeah, it could really help the patients.
Right.
And make everything in the operating room much more efficient.
Makes sense.
It also has built-in safety protocols.
That's good.
Real-time navigation so they can make sure everything's accurate during the procedure.
Okay.
And pre-op planning software so they can make like a very tailored surgical plan for every person.
That's cool. So it's not just like a one-size-fits-all approach.
Right.
It's really tailored to each patient.
Exactly.
And what about those Impress implants? You mentioned those earlier.
Yeah, so those are not just regular implants.
Huh.
They're 3D printed and made specifically for each patient.
Wow.
So the goal is to get a much better anatomical fit.
So it's like a perfect match.
Yeah, and they think that's going to lead to much better results down the line.
Right. That makes sense.
And they think it'll help preserve more of the patient's natural bone during surgery.
Yeah, that's great. Less invasive.
Right. So to just make sense, like an implant made for you is going to work better.
Yeah, it's like a custom-made suit versus something off the rack.
Exactly.
You know, the fit is just going to be better.
Yeah.
And it sounds like they're thinking about the future, too. They have this Envision thing. What's that about?
Yeah, so that's a new tech for surgical registration and tracking.
Okay.
And they want to put that into the Embo system later on.
So it's like an add-on.
Yeah, to make it even more precise. So their main goal is to basically change how we think about orthopedic care.
Okay.
They want personalized joint replacement to be the standard.
And how are they going to do that?
So they're aiming for a better fit of the implants, better stability, making sure the joint's balanced better for each person.
That's a lot.
Yeah, and as we said, saving more of the bone during surgery and reducing micromobility in the implant.
Which is important for long-term success,
Yep,
right?
exactly.
You don't want the implant to be moving around in there.
Right, and they're making some pretty big statements. They're saying they might be the only hands-free, saw-based TPA robot out there,
Wow.
and that they're going to be the first active navigated robotic arm.
If that's true, that could give them a big edge.
Yeah, so to boil it all down,
Yeah.
they're developing a whole system with personalized implants, AI-powered surgical robots for knees, and their plan is to make money by selling the robot, selling the implants, and then selling all the extra stuff that goes along with it, like the software and the tools.
Right.
But right now, they don't have any revenue, so it all depends on them actually selling their EMBO system.
Okay, so it's all riding on that?
Yeah.
And where do they stand in the market right now?
They're still pretty small.
Okay.
They only had 27 employees at the end of last year.
Oh, wow.
They're really focused on R&D and engineering,
Makes sense.
and their costs are mostly variable, which gives them some flexibility.
Yeah.
And they don't have any long-term debt.
That's interesting.
Yeah, so their market cap is somewhere between $77.9 and $85.78 million
Okay.
as of March.
So they're kind of a small fish in a big pond.
Yeah, they're definitely a niche player, but the ortho market is huge.
Right. And it all depends on how that MBuzz does.
Exactly.
All right, well, let's talk about the management team. Who's running the show?
So the CEO is Benjamin Sexton. He's been there since 2018.
Okay.
And he made $375,000 in 2024.
Oh.
And one thing that sticks out is how long the management and the board have been with the company.
Oh, really?
Yeah, the management's been there for an average of 5 years, and the board almost 7.
So it's a pretty stable team then.
Yeah, it seems like it.
And have they been able to raise money? Because that's really important for a company at this stage.
Yeah, they've been pretty good at it. They just got over $20 million from more than 12,000 individual investors.
Wow, that's a lot of people.
Yeah, and by the middle of 2022, they'd gotten about $38 million in total funding.
That's impressive.
Yeah, and they hit that first revenue milestone in 2021.
Okay.
They planned to launch their implants in the first half of 2022.
So they're on track.
Yeah, and of course they got that FDA clearance for both the Empress implants and the EMBO system.
Which is huge.
Yeah, that was really important.
So it sounds like the management team is pretty capable.
Yeah, they've been really good at raising money and getting through all the FDA stuff, which is not easy.
Yeah, the FDA is tough, so getting through that process is a really good sign.
We don't really know how they've handled, like, big public crises. We didn't see any evidence of that.
Okay.
But the fact that they got through the FDA process and answered all their questions
Right.
shows they can adapt and get over hurdles.
Yeah.
Plus, they've kept getting funding even when the market's been a little shaky.
Okay.
So it seems like they're good at keeping investors confident.
That's important.
Yeah, and they seem to really care about being transparent with the market.
That's good.
They're always putting on press releases to keep everyone updated. They do earnings webcasts and calls.
Okay.
And they were really upfront about their FDA submissions,
Yeah.
even telling everyone their timelines.
Yeah. That's helpful for investors.
Yeah, it builds trust.
Definitely.
And they also use those forward-looking statements,
Yeah.
but they always include the warnings and disclaimers, which is good.
Yeah, that's important to manage expectations.
So that consistent communication is a good sign for investors.
Yeah, it shows they're being open and honest.
Yeah, and we didn't find anything bad about their ethical standing in any of the sources we looked at.
Okay, good.
There was something about an ethics code for Monogram Foods, but that's a totally different company.
Right, got to make sure we're talking about the right one.
Yeah,
So it sounds like the management team is honest and capable.
yeah. They're good at raising money. They got through the FDA process. They're communicating clearly.
And it seems like they're really focused on shareholder value.
Yeah, that's a big part of why they're trying so hard to get the FDA clearance and get their product out there.
Yeah, they want to make money for their investors.
Okay, so let's look at how they're spending their money.
Okay, capital allocation.
Yeah, so they've put a lot of their money into R&D.
Okay.
In 2024, it was $8.8 million, which is actually a little less than the $10.6 million they spent in 2023.
Oh, so they're spending a little less.
Yeah, and they said that's because they finished a lot of their verification and validation work.
Okay, so they're moving out of that phase.
Yeah, and they're also investing in clinical trials to get more data, including that one in India, which shall be limited.
Right.
And they're working on making their Umbos robot even faster.
So they're not just resting on their laurels, they're continuing to innovate.
Exactly. They're always improving.
And it's important to keep investing in R&D, especially in this field.
Yeah. Medical devices are always evolving.
So what about mergers and acquisitions? Are they thinking about buying other companies?
Yeah, so their main focus is on growing themselves. But they've said they're open to acquisitions if it'll help their tech or give them new capabilities.
Okay, so they're not opposed to it.
Yeah. And they could use that money they raise for something like that.
Makes sense.
And if they get their product out there successfully,
Right.
it could open doors for partnerships, licensing deals, or even getting bought out by a bigger company.
Yeah, that's always a possibility in this industry.
So in terms of giving money back to shareholders, they haven't really done much in the way of buybacks.
Okay.
We've only like $200 in 2024.
So that's not really a strategy.
Yeah. Yeah. And they don't pay dividends on their common stock.
Like a lot of growth companies.
Right. But they do have a dividend for their Series D preferred stock, which is paid in kind with more stock.
Okay, interesting.
So when you look at their return on invested capital and their return on equity,
Yeah.
both are pretty negative right now.
Which isn't too surprising.
Yeah, they're not making money yet.
Right.
So ROIC is negative 63 to 88%, and ROE is over negative 100%.
Yeah, but that's kind of expected when they're still in this pre-revenue phase.
Right. The real test is going to be what happens to those numbers once they start selling their products.
Exactly.
So it's hard to say if they're using their money well right now. It's still early.
The investments they're making seem necessary to get to market, and that FDA clearance is a big step.
Yeah, that was really important for them.
So let's take a look at that overall financial health.
Right.
Some key metrics here. Their market cap, as we mentioned before, is somewhere between $77.9 and $85.8 million as of March 2025.
And what about their price to earnings ratio?
Yeah. So since they're not profitable, it's either negative or zero,
Okay.
which makes sense.
Makes sense. And their revenue growth.
Well, they only made about $360,000 in the last 12 months, so year-over-year growth isn't really meaningful right now.
Right. It's basically zero.
Yeah. And their profitability, their gross margin is 0%. Operating margin is negative 4,456.9%, and net margin is negative or zero.
Yeah, all that's because they're not selling anything yet.
Yeah, pretty normal for a company at this stage.
So their balance sheet, their debt-to-equity ratio is pretty low, either 0.02 or 2.28, depending on the source.
So they're not loaded up with debt
Yeah,
and free cash flow?
that's negative $14.05 million for the trailing 12 months and $4.33 million for the last quarter.
Again, because of all the investing and no sales yet.
Exactly.
And their price-to-book ratio is between 4.4 and 5.25.
So are they profitable and do they have a strong balance sheet?
No, they're not profitable yet.
But it does look like their balance sheet is pretty strong.
Yeah, low debt to equity, and their current ratio is 7.31, which is good.
Yeah, that means they have plenty of cash on hand to cover their short-term debts.
Exactly.
So let's look a little closer at their stability. It's hard to tell much about their earnings since they just went public in May 2023.
Yeah, not a lot of history there.
But their recent reports all show losses,
Okay.
which makes sense since they're still investing so much
Right.
and they're not paying dividends on their common stocks, so we can't look at that.
But their debt management seems to be good. That low debt to equity ratio and the fact that they have more cash than debt is a good sign.
Yeah, they're being careful.
And their working capital is efficient. That current ratio of 7.31 and the net working capital of about $14.7 million at the end of 2024 shows they're doing well in the short term.
So their earnings are consistently negative, but they don't have too much debt, so that's good.
Yeah, their balance sheet looks pretty healthy, especially as they're about to start selling.
What's the market saying about Monogram?
Well, it's a little mixed.
Okay.
Their stock price has gone down since the IPO. But in January, there was a big drop in short interest.
Really?
Yeah, which could mean that some investors are feeling more positive about them.
Yeah, maybe they're seeing the FDA clearance as a good sign.
Yeah, but the stock price is known to be pretty volatile, so it could go up and down a lot.
So it sounds like people are still a little uncertain.
Yeah, that drop in short interest is interesting, though.
Yeah, for sure.
It means that some people who were betting against the company are now less pessimistic.
Yeah.
And if you look at the analysts, their price targets are actually pretty optimistic.
Really?
Yeah, there's a strong buy rating with a target of $4.
Wow.
The median target is $5, with a range from $4 to $6.
Okay.
And the average one-year target is $5.10.
So they're saying it could go up quite a bit.
Yeah, they see a lot of potential upside.
And what about the news lately?
Mostly positive, especially since they got the FDA clearance and their 2024 financials came out.
Right.
Those showed they have a good amount of cash and they're making progress with R&D.
Yeah, and the stock price went up after the FDA clearance, so the market liked that.
Exactly.
So what about short interest and options?
Well, like we said, short interest has gone down a lot.
Right.
And the short ratio is 3.26. So there's still some people shorting the stock, but not as many.
So let's talk about ownership. Who are the main players?
All right, so institutional ownership is pretty low, only about 3.85% to 4.32% of the shares.
Okay.
But insiders own a lot, between 34.22% and 35.06%.
Wow. So the management team and board have a lot of skin in the game.
Yeah, and they bought about $1 million worth of stock on the open market.
That's a good sign.
Yeah, it shows they're confident.
The CEO, Benjamin Sexton, owns 11.68% himself.
So he's really invested in the company.
Yeah, and that high insider ownership is usually seen as a good thing by the market.
Right. It means they're aligned with the other shareholders.
Yeah, they want the company to succeed just as much as everyone else.
But the low institutional ownership could mean that the big investors are waiting to see what happens.
Yeah, they want to see if the company can actually sell their product.
And their board does have independent members, so that's a good sign for corporate governance.
Okay, so now let's do a risk assessment.
A SWOT analysis, let's see.
Yeah, so their strengths, they've got this unique tech with the personalized implants and the robotic surgery.
Right.
They got FDA clearance, which is huge.
It's time.
They could really improve outcomes for patients and save more bone during surgery.
Yeah.
And their focus on speed with a robot is a plus. They also have a lot of cash on hand. Their management team is experienced. They own a lot of the stock. They've got that partnership in India, and they have a bunch of patents.
Sounds good.
Yeah, but for weaknesses, they're not selling anything yet, so they're losing money.
Right.
They're a small company compared to the big players. They don't have a big brand name yet, and everything really depends on them selling that EMBO system.
Yeah, that's a big risk.
And they haven't done much with buybacks or dividends for the common stock.
Okay.
But there are a lot of opportunities for them. The market is huge, and it's growing. People want minimally invasive and personalized solutions.
Definitely.
And more surgeries are being done in ASCs, which is another opportunity for them.
Okay.
And they could expand their tech into other areas of orthopedics, gain market share, partner with other companies, or even get bought out by a bigger one. And they could grow internationally even more.
A lot of possibilities.
Yeah. But there are some threats, too.
Of course.
There's a lot of competition. It's hard to enter this market. Surgeons might be slow to adopt their tech.
Yeah.
Technology changes fast, so they got to keep up. We don't know how insurance will handle reimbursement for this.
That's a big one.
Yeah, and there's always the risk of problems with the devices.
Right. Recalls, things like that.
And they need to keep doing clinical trials and getting FDA approval for new stuff. And the economy could always take a downturn.
It's a mixed bag.
It is. So to sum it up, Monogram could be a game changer in orthopedic robots with their personalized approach. Getting FDA clearance was huge for them.
No doubt.
The market is big, and their management team seems solid.
But there's still pre-revenue, and there's a lot of competition.
Yeah, so it's risky,
Mm.
but it could be a good investment for people who are willing to wait and who can handle the risk.
Yeah. And their focus on personalization and efficiency is something to keep an eye on.
You got to keep watching to see how they do once they start selling.
Absolutely.
So just to recap,
Okay.
Monogram has come up with a new way to do orthopedic surgery with these personalized implants and robots.
Right.
They got FDA clearance, which is a big deal, and the market is big and growing.
But they don't have any sales yet, and there's a lot of competition.
And now for our final thought.
Here we go.
So this whole idea of AI and personalized medicine, like what Monogram is doing, it might not just be about making surgery better.
Yeah.
It could actually change how we think about and treat all kinds of medical problems.
That's interesting.
Imagine treatments that are tailored to each individual person.
Wow, that would be amazing.
So it makes you wonder, what other areas of healthcare could be changed by this kind of tech?
That's a great question for our viewers to think about.
Yeah, and if you want to see more deep dives into companies like this, subscribe to the Stock Analytics AI YouTube channel.
We cover all sorts of innovative companies and technologies.
Just remember, everything we talked about today is based on publicly available research, and it's not financial advice.
Right.
You got to do your own research before you invest.
Definitely. And any stock suggestions or opinions in the comments are not from us.
Right.
Always do your own research and talk to a financial advisor before you make any investment decisions.
That's important.
We're just here to provide information and analysis.
And hopefully make you think a little bit.
Exactly.
All right, that's it for today.
Thanks for joining us.
See you next time.